Well, hello everyone, and welcome to Beautiful Faces Going Places Women's Success Network. We are on our special event this week called Virtual Business Week, and we're actually on day 4. And what Virtual Business Week is all about really is bringing education, information, and resources to small business owners and entrepreneurs virtually. So we bring in daily guest speakers with fabulous topics and information regarding business. So today our special featured guest speaker is Christine Luken. So if you are ready to master your money and become a financial success, then you need Christine Luken, the financial lifeguard, in your corner. As the founder of the Financial Dignity Movement, Christine has coached hundreds of high-earning professionals to pay off staggering amounts of debt and massively increase their net worth. Christine's book, Money is Emotional: Prevent Your Heart from Hijacking Your Wallet, has landed her almost 100 podcasts and TV interviews, establishing her as the authority on money and emotions. So please help me welcome Christine Luken, financial coach. And today our topic is disaster-proof your personal finances. Hello, Christine.
Hello. Thanks so much for having me. So if everyone could please mute yourself and go ahead if you have questions as we're going through. Put them in the chat box, so we do have time to get to all of your questions. And if we don't get to them as I'm going through things, we will have time at the end to answer any of your questions, whether it's related to what we're talking about, or even if it's something that we don't cover here. But, if your livelihood is being affected because of the COVID-19 pandemic, you are not alone. Many public-facing businesses and organizations are reducing hours, they're going virtual. And, for some of us, that means that income has been cut back. Maybe our income has been cut back. Maybe our spouse's income has been cut back. And so, really what this has brought to the forefront is there's a lot of uncertainty. And with all this uncertainty can come fear and anxiety around our finances. So my goal for you today is to learn some things to help you take back your power relative to your personal finances so that you can really thrive with your money. And I'm going to stop my video because I wave my hands around and I end up distracting myself because I really get into talking about this. So here's what we are going to cover. What to do if you're in financial crisis right now. We're also going to talk about tips to disaster-proof your finances for the future once the crisis has passed, because it will, and also how to develop a rock-solid mindset of emotional invincibility. So my name is Christine Luken. I am known as the Financial Lifeguard. I am a money and emotions expert. I have been a financial coach for over 12 years. And what that means is I help people with their day-to-day money management. So we're not talking about investments, insurance, long-term wealth building. It's more about helping people to create a system to manage their spending, their savings, and their debt reduction that they want to do in a way that is simple and easy to implement. Because my goal for everyone is to wake up every morning feeling really good about where you are financially. Not necessarily that you won $1 million, but you have a plan, you're working your plan, and you're making progress. So money is very emotional, and we have to acknowledge this fact. And I'm sure some of you are probably feeling that heightened emotion right now, especially if there is stuff going on in your finances. And it's very interesting because recently science has discovered that the moment of decision happens in the same part of our brain that processes emotion. So it is literally impossible to remove emotion from our finances. However, I'm going to teach you some things today that are going to help you harness your emotions and use them for good rather than to be bullied by your emotions, so to speak, and be at their mercy. So let's get into disaster proofing your personal finances and what that actually looks like. So the number one thing that you need to do is to assess the situation. You really want to get a clear picture of what is actually going on with your personal finances. If you are not someone who has a regular rhythm of managing your finances and looking at things at least on a weekly basis, then this needs to be your top priority. Maybe you are married or in a relationship where your spouse or partner handles the majority of the finances. It's really important, especially for us as women, even if someone else is handling the vast majority of the details, that we have our finger on the pulse of what is going on and that we are included in looking at the finances, understanding what bills need to be paid, and how much it actually takes to run the household on a monthly basis. So you really want to understand, what are your expenses, right? What does it take in an average month to pay all of the bills, right? Even without the fun stuff, like what is that baseline of income that has to come in? What are all your different sources of income? What is the value of your assets, and understanding the level of debt that you have? These are all parts of the picture. Because here's the thing, if you experience some sort of a financial setback, you have to know exactly what you're dealing with, right? You can't make constructive decisions if you don't know what's going on right now, right? In the same way, you can't get directions to go somewhere if you don't know where you're starting from. Right? That's a critical point. Like your GPS can't even give you directions to go somewhere if you don't allow it to see where you are right now. And so this is the exact same thing. So does your cut in income mean that you're $300 short of covering your essentials every month, or does it mean you're $3,000 short of covering your expenses every month? Obviously those two things are going to require very different solutions. So assessing the situation, seeing it in black and white, will allow you to make a plan of action to move forward. And so once we assess the situation, we don't want this to be a one and done thing, right? You don't just want to look down and say, okay, here's exactly where I am, and then we never look at the details again for another 6 months. When I am working with my clients, we develop the weekly rhythm of what I call money dates. So the reason why I like doing these weekly versus monthly is because it keeps you on top of things and it doesn't have to take a long time, right? If you're only checking on your finances every month, you can set up a plan and have very good intentions, but if you don't check back in and see how you're doing until the month is almost over, you could have gotten really far off track within the first 10 days of the month, but now it's too late to do anything about it, right? And then you feel defeated, right? And you might even feel like guilty that you didn't do what you said you were going to do. And then you might even think like, well, oh, this doesn't work, or I'm not good with money. But the problem is that we need to be checking in more often. And so that's why I advocate the weekly money dates. And so it doesn't have to be on a Friday night, but it certainly can be. I typically do my weekly money dates on Saturday morning. I make it a pleasant experience. So I have my cup of delicious coffee. I usually have my essential oil diffuser going. Sometimes I will play some upbeat music or some relaxing music. And it really only takes me about 15 to 20 minutes. And if you are a business owner, you can do both your business and your personal finances back to back. And that's typically what I do. So I will, update everything in my QuickBooks, check my accounts, make sure everything is in order. If it is the beginning of the month, I might need to print out my bank statement, put my receipts with it, print my financial statement so I actually know how I did in my business the previous month. And the same thing goes with your personal finances. I actually just made a social media post about this today, the 4 things that you should be doing during your weekly date with money. And that is, paying your bills, checking on your spending to see how you're doing versus your plan, transferring money to savings and investment accounts, and checking in with your spouse or partner on any exceptions. So in my household, I handle the majority of the bill paying and the financial management, but my husband and I have regular discussions about this, right? Anytime there's anything out of the ordinary, or if we're working on a major goal, like right now, our goal is getting the mortgage paid off. So we talk at least once a week about, hey, how's it looking in the business? How much do you think you want to pay extra on the mortgage? Because it's a goal that we're really excited about. The other thing you will want to do is have a tool to help track this information. Certainly you can just use old-fashioned pencil and paper. You could use a spreadsheet, but I really love some of these online tools that are free, like mint.com, or the tool that I use with my clients, it's called askzeta.com. Both of those are free. And they're really pretty simple to set up. You link your bank accounts, you set up your spending categories, and it allows you to see things in real time. So if you say we're going to spend $300 on eating out, you can see on that bar, am I still in the green? Do I still have money left to spend? Because I find a lot of times, especially in a couples dynamic, if you're both spending money in a certain category, like you're thinking, well, I've only spent $100, and he's thinking, well, I've only spent $200. Well, if you've only allocated $300 for the entire month, like you might go and spend another 100, and he might go and spend another 100, and next thing you know, you're $200 over budget. So having a tool like this allows both of you to be able to see where you are how things are going. It allows you to keep your pulse or keep your finger on the pulse of your finances and have that ongoing awareness. All right, so the other thing we need to do is we need to stockpile emergency savings. So notice I did not say stockpile toilet paper or hand sanitizer. We actually want to stockpile some money. So I like to say an adequate emergency fund is like a warm blanket during a financial winter. I recommend that everyone have 6 months of their household expenses in a savings or money market account. So if you haven't done step 1 and assessed how much it takes to run your household every month, you won't be able to calculate this target, right? So if you have done that homework and you say, okay, in order to pay all of our bills, buy the groceries, etc., it's about $5,000 a month. So that's your target, right? And so if you have nothing in savings right now, that could seem like a huge amount, right? You're like, oh my gosh, we have like $100 in savings, and you're saying we need like $30,000 in savings. Well, here's the thing. Start small. Make your first goal be 1 month of savings, and have that be your first target. And once you reach that, then you can bump that up and say, okay, now that we've got 5 in there, our next goal is to get it up to 10, right? Until you get that up to 6 months of your household expenses. Now, there might be some of you, especially if you're self-employed and if your spouse is self-employed, you may actually want more than that. So I usually say 6 months is the minimum. In financial circles, we used to say 3 to 6 months, but I think since, the recession in 2008, 2009, plus everything that's going on right now, I just don't think that 3 months is nearly enough, right? Especially if you've experienced a layoff, you can probably agree that that's not enough. Now, I tell people, start small, set up automatic transfers. So if you get paid every 2 weeks, set up a transfer of $100, of $200 to immediately go to your savings account. Because if you rely on the fact that you have to log in and manually make that transfer, the likelihood of that happening decreases dramatically. And I always tell people, if you transfer too much and you need to transfer some back, that's not a big deal, right? But go ahead and set up those automatic transfers. So my husband gets paid every week, and we actually, both of us have transfers set up every single Friday. Money gets kicked over into both of our savings accounts. I am not so much concerned about the rate of return on your emergency savings because it's not an investment. Okay. This is more like insurance that you will be covered if an emergency happens. I shouldn't say if an emergency happens, I should say when an emergency happens, because, even when this situation has passed, we're going to continue to have emergencies like car repairs, right? I know some of the advice out there, and I get this question a lot relative to emergency savings, is that like, oh, shouldn't I just save $1,000 and then work on reducing my debt? Well, I can tell you $1,000 is not enough, right? I mean, you can have a pretty minor car repair bill and it's going to blow through $1,000 pretty fast. So as a mini goal, I would say 1 month, at least have 1 month of your expenses in your emergency savings before you start doing any major work on debt reduction. And the reason why I say this is because I don't want you relying on your credit cards as an emergency fund. And here's why. Creditors can reduce your credit limit whenever they want to and for any or no reason. In fact, a friend of mine recently confessed that her bank reduced her Visa's credit limit from $9,000 down to $1,000. And she found out in line at the grocery store, and it was like declined. She's like, there's no way. And so she ended up having to use her debit card. And so when she got back home and she called, what happened was there was an old unpaid medical bill that was her son's, that she had obviously signed as the responsible party, and it popped up on her credit report. And so Visa saw that and he said, oh, there's a collections out there. I'm going to need to draw this back. Well, here's the thing. She didn't even know about the bill. Like, she would have paid it, but she had no idea it was even out there. So she did end up, making good on that medical bill and getting that paid off. But had she been reliant on that credit line, it might not have been there when she needed it. So don't rely on your credit cards as your emergency fund. Now, of course, we do want to pay minimums on all of our debts. If your income has been cut, or maybe even if there's a possibility of it, it's okay to just pay the minimum dues for now. There have been a lot of banks that are offering different types of assistance. So if you are in a situation where, income has been cut, reach out to the banks that are holding your credit cards or even holding your mortgage, and find out if there is some sort of relief program that you can plug into. Now, the one thing is you want to make sure that you understand exactly what you're signing up for. So I'll give you an example. A friend of mine, her husband was laid off for about 4 months. He is thankfully back to work now. But when the layoff first came, she reached out to her mortgage company and asked them if there was some kind of relief program. And so they said yes. And so she got the details of that. And she found out that different banks do it differently. So for her particular bank, they said that they could defer up to 6 months of mortgage payments if they needed to. And in their situation, they said that they would tack those payments on the end. Now, they said that all those payments will be due at once at the end. And, my friend was okay with that because she and her husband were actively working to pay off their mortgage early. So they didn't see that as being a problem. With other banks, they are saying, well, we'll defer payments for 3 months or 6 months, but after that time period is over, you have to pay all those missing payments at one time. That might not help you, right? That might actually be more stressful for you. And, if you're able to continue making those payments, then that might be the best thing to do. And the other thing I want to say is, when it comes to debt, we want to make sure that we are committing to only carrying the amount of debt that we feel comfortable with. So I like to say that debt is like carrying around a dumbbell. So let's just say, Carol, that I handed you a 2-pound dumbbell and I said, I want you to carry this around with you everywhere that you go today. And so, you'd probably throw that into your purse or maybe a backpack, right? Or maybe you've got a dress with pockets and you put it in your pocket, right? You might even forget that you're carrying it around because it's just 2 pounds, right? It's not heavy. But if I said, all right, Carol, here's this 50-pound weight and I'm going to strap it to your back and you have to carry it with you everywhere that you go. That would make even the most routine things feel really, really difficult. I mean, imagine trying to bend over and tie your shoe with a 50-pound weight on your back, right? You might fall over. It's the same way with debt. If we are carrying a small amount, then it's not going to feel like a burden, right? But if we're carrying around too much debt, it's going to make everyday life feel very stressful. And so this is a very personal decision about how much debt do you and your family feel comfortable carrying, where it's not a source of stress for you. And I will say, people who have what I call larger financial muscles can actually carry more debt without feeling as stressed. In the same way that, if you've got somebody like The Rock, or Arnold Schwarzenegger, right? They can carry around much bigger weights than the average person, and it doesn't feel like much to them because their muscles are really big. So if you and your spouse or just you have a high net worth and you have a high level of income, you can carry a higher level of debt without it feeling as stressful. So the example I always give is, if there's a doctor who's making $350,000 a year and he has $50,000 of student loans left to pay off, that probably isn't going to feel that cumbersome to him. But if you've got a nurse who's only making $80,000 and she has $50,000 of student loan debt left, that might feel like a big burden. Right? So it's really about that gut check. First of all, saying, do the numbers make sense? And also, how do I feel about it? Because even if you have a small amount of debt, if that carries some stress with it, then you may just want to pay it off. All right, I think I saw we had a question. So let me just pop in. Oh, nope, that was not a question. All right. So, see if you qualify for assistance. This is the other thing I tell people is don't be ashamed to accept help. And I know sometimes as women that can be hard for us to accept help because we're always the ones that are helping other people, right? So I always tell people, don't be ashamed to ask for help. And, this could be, if you do lose your job or your spouse loses your job, file for the unemployment benefits that you're entitled to. That's what it's there for. Also for some of us, we might have looked into small business loans or subsidies if our business income has taken a hit. And certainly I hope no one here on the call has, is in a situation where they're concerned about keeping the power on or, keeping food in the house. But maybe someone who's in that situation. And, there's a lot of nonprofits and churches that are stepping up and stepping into that gap to help people with those needs. Oops. There we go. All right. So you guys know this has to be said. We might need to cut some unnecessary spending, right? Especially if you have had a cut in income. Now, most of us have areas of our spending that can be trimmed back without much pain. So we want to go back to that first point and assess how you were spending money before all this happened. Are there different things that you're not even making use of, right? I find that there's a lot of times it's super easy for us to sign up for subscription-based things and then not be taking full advantage of those. So one of the things that I like to do, and I do this for my business and my personal, usually once every 6 months. And typically I will do this in like March and September. So this will be something that I'll be doing next month, is looking at all of those recurring subscriptions on the personal side and on the business side and asking yourself, do I need this? Am I still using this? Is this still the right subscription level, right? Because a lot of times with these online tools that we're using for our business, maybe we're not, we could downgrade a subscription versus getting rid of it. So we want to look at those areas to say, where are we overspending? What expenses can be eliminated, trimmed, or maybe even postponed? Maybe there was something that you were thinking about purchasing and, we're not saying, no, we're never going to buy this, but maybe we can just postpone it until our income picks back up, right? So, and the other thing I tell people is, when we're managing our finances, unless we're in a crisis situation, we want this to be more like a healthy eating plan than a crash diet. Because I see people who get really gung-ho about this, where they're like, I'm going to get my crap together when it comes to my money. And they start like slashing things like crazy. And certainly some things might need to be trimmed back, but we want an approach that's going to be sustainable. So sometimes I will even have clients where maybe they're spending $500 a month on eating out and they're like, oh, we could probably cut that down to $200. And I will actually encourage them to not do that. I will say, let's just set a goal for this next 30 days to just spend $400 and see how that feels, right? And so maybe we can cut several different areas back a little bit, rather than eliminating one entire thing, especially if that's a source of enjoyment and a source of fun for you. But the bottom line is, if we are wastefully spending money, that means that there's less for debt reduction and there's less for savings. So the other thing we want to think about is not rating our retirement. I know this might be tempting because Congress has waived early withdrawal penalties for the meantime, but you're actually being punished with taxes and selling potentially in a down market as well. One of the certified financial planners, who's a friend of mine, Anthony Ruffalo, he said this, and I want to quote him because it's so good. He said, one of the worst financial mistakes that someone can make at this very moment is an early withdrawal from a retirement plan. He said, I would beg, borrow, and steal before liquidating retirement accounts under the current conditions. The biggest penalty of all will be the loss of potential growth compounding over the next 20 to 30 years. The consequences are devastating and often underestimated. So I highly recommend that this is a last resort. The only other thing I will tell people is, don't do a payday lender, right? This would be the only time when I would say, like, if your only choice is between taking a little bit from your retirement or doing a payday lender, that's the only time I will tell you that I might consider telling you that's okay. The other thing to think about is that, this money is meant for your elder self. And I know this sounds kind of harsh where I say like you're stealing from your elder self when you take out early withdrawals from your retirement, but it's true. Your job right now is to provide for your elder self. You are the youngest you will ever be right now, right? You're not getting any younger. You know, you're probably not going to be more energetic and wanting to work more hours the older that you get. And so, you know, it's really important that you almost see your elder self as another person, right? I will actually encourage my clients to use an app that ages their face so that they can see what they look like, you know, when they're in their 70s, 80s, or 90s, just to say like, it is my job to take care of this person. Now, you know, Carol, if you found out that somebody stole money from your elderly parents, you would be really upset, right? You would be really pissed off at them. Well, here's the thing. When you take early withdrawals from your retirement, you're essentially doing that to your elder self, and you should be just as mad about that, right? Because you're taking it from yourself when you're at the most vulnerable. And the other important point to keep in mind is that money in qualified retirement accounts is protected from bankruptcy and from lawsuits. So, you know, if the worst happened and you had to file bankruptcy, the money in your retirement accounts is untouchable. And the same thing goes for lawsuits. If somebody tries to sue you because, you know, you hit them in a car accident or something like that and didn't have enough insurance, they can't touch the money that's in your retirement accounts. But as soon as you pull it out, that protection goes away. All right, so my final point is all about developing emotional invincibility. So disaster-proofing your personal finances is partly about the money, and it's partly about the mindset. And creating and keeping a positive money mindset is not a one and done deal. It's something that you'll always need to pay attention to. Today's society, as we know, it thrives on panic, scarcity, and sensationalism, especially when it comes to financial matters. And if your mindset is not strong, it's pretty easy to be swept along on that tidal wave of fear. So how do you develop this emotional invincibility that I'm talking about? So I learned how to do this from Hal Elrod in his book, The Miracle Equation. And it's something that, it's a book that I recommend a lot. So definitely write that down, The Miracle Equation by Hal Elrod. So here is how it works. When something upsetting happens to you, I want you to set the timer on your phone for 5 minutes. During that 5 minutes, I want you to just go ahead and have your meltdown and just get it out. You can rant and rave, scream, cry, cuss, hit a pillow, whatever you need to do for those 5 minutes. Once the timer goes off, stop. Stop what you're doing and say out loud, I can't change it. I can't change the fact that this has happened. Now, what can you do? Is there something that you can do to make the situation better? Is there something constructive that you can put your energy into? And if there's not, then go relax and enjoy yourself. And I'll give you a good example of how I applied this to my life. So this is something that you can apply to any area of your life, not just financial. But I know we have a lot of entrepreneurs on here, and I think that you will really resonate with this example. So, you know, I coach people on their finances. The bread and butter of my business is one-on-one coaching. My coaching packages are not cheap because I work with people for 6 months and we go pretty deep into the money mindset in addition to all the practical financial things. So, you know, not everybody that has a discovery call with me is going to end up being my customer, my client. So I found what was happening is that I would have a great discovery call with someone and I would think, oh, Carol is my perfect client. She is definitely gonna, you know, she's definitely gonna sign up. She seemed really interested. She seemed really excited. Well, then I hear from her a couple days later and she says no. I found myself getting really upset. I would be extremely disappointed. I would be like, oh my gosh, I thought she was going to say yes. What did I do wrong? And then I'd start worrying and saying like, okay, well, if she's not going to sign on with me, like, where is the money going to come from? And I would find myself getting into that downward spiral. And so I started applying this. And when somebody would say no to something, I would go ahead and set my timer. I mean, obviously I'd wait and hang up the phone before I had my little tantrum. But I would only allow myself 5 minutes to feel bad. And then after the 5 minutes, I would say, you know what, I can't change it. I can't make somebody hire me. And if I do make somebody hire me, that's not a good energetic exchange. I want somebody to really want to work with me and feel like it's going to be a good investment. So what I would do is I would say, okay, I can't change the fact that Carol said no, but what can I do to move my business forward? What can I do to get more people in the funnel, to get more people on discovery calls with me? Do I need to schedule a webinar? Do I need to send out some emails? Do I need to follow up with some people who maybe told me a month ago or 2 months ago or 3 months ago that they just weren't ready yet for coaching? Maybe I need to touch base with them and see if they're ready now. So those are some of the constructive things that I could do rather than wasting this energy and creating this spiral where I would end up being in a funk for 2 or 3 days because somebody said no. The most important thing we need to do when it comes to our finances is to not act from a place of panic. Financial knee-jerk decisions rarely end well. We just want to take a deep breath and, ask yourself, 5 years from now, will I be happy with this decision that I'm about to make? And you know what? If you need help, if you feel that you have a very high level of anxiety, or if you feel like you have a complicated decision that you have to make and you don't feel equipped to handle that by yourself, that's when you reach out to a financial professional. Most of you probably have a CPA or, someone at your bank that you can get some help from, your financial planner. That's what these people are here for. I also dropped the link for my Financial Dignity Tribe, which is my free Facebook group. That's a safe place for people to ask their questions and to reach out and say, hey, I'm considering this, or I'm wrestling with this decision. Can you help me? That's a safe place to ask those questions. Because here's the thing, once the crisis has passed, which it will, we want to use this experience to disaster-proof our finances for the future. So if there were certain things that I talked about that really resonated with you, put those on your to-do list, put those on your calendar, and, don't let this, just be like, oh, I had these aha moments and then I never acted on them. Because disaster proofing your personal finances, it is a process. You're not going to get it all accomplished in a day, a week, or even a month. So pick several of the things that I talked about where you feel like I really need to come up higher here, and put those on the to-do list and start on that process, because your future self is going to thank you. All right, so I saw we had some questions popping up here, so I'm going to pop in the chat box. Awesome. Okay, so we're going to be cutting back on spending. Awesome. So questions, comments?
Yes. What I have found is that, and I'm sure this has been for many others, it's not really a question, but I think all of us have saved money during COVID because our reaction using our car.
Yes.
And how much money we would spend. I've been a brown bagger my entire life. When I was running nonprofits, I didn't think I was raising money to take me to lunch. And when I was working for myself, I'm not spending money.
I love that.
I just brown bag. Besides, I can control the calories, and I'm a good cook. I'm a foodie. But boy, oh boy, you still want to get a cup of tea. You still want to get a cup of coffee because you're taking up the space. And it's $3 here and $4 there, and then a tip and blah. And oh my Lord. And I think we've all saved money. And I'm not going back there.
Yeah.
So I think this has really been a tremendous time for helping us cut expenses. And I think for a lot of us who maybe have not been able to do the one movie a week or this or that, if we've been okay without it.
Right. Maybe it's just once every other week, right? Yeah.
It's really helped. Well, if if we do that, when it happens when the movie theaters open up. But have you noticed that the movie theaters, I just went in my neighborhood the other day and they're showing like Jurassic Park. There's no new movies coming out. And so the theaters are showing the Jurassic Park. But it's been helpful. It's been a good kickstart in that direction.
Well, I think in the early days of the pandemic, a lot of us were saving money on personal care, which I was not okay with because I love getting my nails done. So I was very happy when the nail salons opened back up.
The flip side to all that, though, is that even though us as personal consumers are saving money in that stuff, the businesses are suffering from that.
Absolutely.
Because I was driving down the road the other day and I thought, I've saved so much money in oil changes because I used to drive 1,000 miles a week or whatever it was. But then at the same time, I thought about the business and I'm like, well, they're not getting my business and they're not getting everybody else's business for all those oil changes they had. And people are being laid off from that. So it's really a double-edged sword when we look at it. It is a
double-edged sword. Yes, it is. And those wonderful little restaurants that we do enjoy going to, absolutely. The salons, the solopreneurs cutting our hair. Oh yeah. So yeah, there's a lot of consciousness we have to put into what has happened here going forward, so that as a business community, we can sort of understand that we're all partners together and how can we, all of us, come out on the other side.
Absolutely. Well, and I think one of the things it's helping is to bring that consciousness around our spending. Because one of the things that I tell people, like, if you're my client, I'm not going to talk about cutting spending. I talk about redirecting spending. And it's really, what is important to you and your family? What are the goals that you want to achieve? What are the things that are important to you? Because it's not really the money that we want. It's the freedom and the options that the finances provide. And so having people really create a clear picture of what does their ideal life look like when there isn't constant stress about money. And then it's just saying like, okay, now that we have clarified that, then we can do that assessment and say, well, how are we spending our money now? And based off of how we are spending our money now, it's basically saying that these things are important to us. And do they line up with these things that we say that we really want? And so it's really just a matter of saying, maybe these things aren't as important, because we've just been engaged in this mindless spending. But, I tell people, if there's something that really gives you, pleasure and enjoyment and enhances your life, then we're going to find a way to work it into your spending plan. So it really is all about those choices. And I saw somebody wrote something about naughty behavior.
No, somebody wrote something about Tom Hanks.
Oh,
naughty behavior. I don't know. I should have said to the person who sent that. I'm sorry. I didn't mean that.
That's okay. I was like, what? I thought somebody was saying like they had naughty behavior with money. And I'm like, I don't like to create that sort of emotional environment around our money. We want spending to be enjoyable. And like I said, I don't like us to look at our finances like a crash diet where it's like, I'm either being good or I'm being bad. There is room for portion controlled fun in our finances.
Now maybe getting your nails is important. That's important. So you say, I'm going to continue doing it, but here's something that really didn't much matter. I didn't really have to go to the movies twice a week. I can do something different because I do want to support. It's important I support this woman who's running the salon. Mm-hmm. This big movie theater owned by somebody in Houston, Texas. They're not going to miss me. Right. Or that person who you're not seeing as often for the oil change. Maybe you could talk to the owner and say, I really feel bad. What can I do to help you? I mean, what are you looking? How can I maybe help direct business your way? Because I'm really not going to start driving 1,000 miles a week again. What can I do? And And that opens up, they don't find out what you're doing. I mean, it really gives us up. We have to look at these things as opportunities.
Absolutely.
And because that's what they are. This is epic. It's historic. It's epic. And people who adapt will survive it. But we have to help each other in that adaptation.
Yes. Yes. And I did want to let you know that, and I'm going to copy this and redrop it in there, so that you guys get a free copy of my book, Money is Emotional, Prevent Your Heart from Hijacking Your Wallet. And I'm dropping the link in there so that you guys can get that free digital copy. And the great thing about the book is that no matter where you are in your finances, you're going to find something good in there. And I have a lot of parents who actually will read it with their kids.
Well, that's fantastic. Thank you so much. I mean, that's a lovely gift. I can't wait to download my free copy. And you know what? I just love, Christine, your approach to talking about money and really putting together sounds to me like a family plan so that it doesn't have to be painful. It doesn't have to be emotional. And I loved how you said it's really about redirecting, right? Redirecting your funds. And we really don't have to live without, on a budgetary crash diets. But I just love your approach to that of just redirecting.
Yes. Yeah.
And I also, I'd like to just add, I really think the whole subject about money as a society and as a culture, I think a lot of that is not built into our homes, in our upbringing. You know what I mean? We're not teaching our kids, I think even in schools, how to manage family budgets and family finances. So they do graduate from high school and go on to college. A lot of them don't have some of the basic elements that I think is lacking today. So.
Right. Yeah. Well, and it's like people are like, oh, they should teach that in school. Well, it's like, some of the programs that are taught in school are sponsored by Visa and sponsored by different banks that are essentially teaching children to become consumers, not for children to become masters of wealth building and to be contributors to society, right? And to make sure that we have things like charity and giving built into our prosperity plans. It's not just about us prospering for our own benefit. It's, prospering for our own benefit so that that overflow can help other people. Right. And you're probably not going to get that kind of a teaching in a school. So that's why it is important for families to be talking about those things. Right. And I think one of the major obstacles is that parents feel like they're struggling themselves. And so they don't really feel qualified to talk about it because they really don't want to talk about it themselves.
Very good point.
Yes.
Yes, exactly. Does anyone else have any comments or takeaways? I mean, I have so many takeaways. I cannot wait to look into the AskZedeca.com or the Mint.com as free apps to help manage some of the, money points. Where am I at in my business, weekly, monthly? So I loved all of, really, it's a strategy, isn't it? And it's a process.
Yes. Well, and I will say, if you're part of a couple, Ask Zeta is the better of the two apps because you each have your own unique login. And especially if you have a hybrid approach where maybe you and your spouse or partner have some of your money in joint accounts, but you might also have some separate spending money, it allows you to have a whole variety of hybrid plans, and you are basically empowered to decide what you're sharing with your partner. It's something that I highly encourage engaged couples to start using because it kind of helps them baby step their finances together.
And I signed up for it while you were talking about it. And it's not as friendly for like divorced people because it's still asking for your partner's name. And it's
I know. Well, that's so funny, but here's what I tell. So I use it for all my clients, whether they're single, divorced, married, whatever. I tell them to put in their fantasy partner. So one of my favorite clients, her partner's name is Thor because she loves the actor that plays Thor. So every time she logs in, it's like, let's connect Thor's accounts to your accounts, and it just makes her laugh. So
I can rename it because I put NA and apparently so my fantasy partner doesn't exist.
yeah, you can. I think you can go in and change that.
Christine, this is Joan Williams, and I'm in Georgia. I don't know if all the rest of you are, I think, Ohio, perhaps, or Kentucky.
Mostly, yes.
I'm a friend of Celeste Giordano, and I know Carol. Yeah. But I just want to say thank you for what you're doing because it's so needed today. And you explain it in a very common sense, not overwhelming approach. So I am one of those former home economics teachers. And, home economics was taken out of the schools pretty much in the 80s.
I know.
And I used to teach these principles that you talked about, budgeting and planning ahead. And then we can see that our children, our families today who grew up in that era don't have a clue. So I think it's good that you're teaching the family because when they can get their finances right, then they're teaching their children. And so that can stop, the ongoing accumulating so much debt that you're really working just to pay off your debt and not really to have a quality of life.
Yeah.
So kudos to what you're doing.
Thanks. Yes. Well, and you'll read in my book, like my personal story, because I crashed and burned myself in my 20s. And so I say it's like the least boring money book you'll ever read because it's like half tabloid of my life as I was crashing and burning. And the other half is financial how-to, but it is from the perspective of how do we harness our emotions rather than trying to leave them out of the picture.
Yeah, delayed gratification, which isn't really taught today. So
no, it's not.
I think that's awesome too. You're right. Money is energy and it is emotional. So I think I appreciate that view. And I like your friend really is just then manifesting her future partner when she puts Thor in.
I know.
I didn't think of it.
It's open. It just manifests who's coming next. I really appreciated the tip about not rating your retirement account, especially right now. And the perspective that you framed it. My husband and I even kind of had a really brief conversation. He goes, I was kind of wondering if that would be worth it just, to pay down the mortgage. So I didn't think about the fact that it is a down market and it is still going to be taxed and it's not worth it. But then to go back and that's your future self that you're taking care of. So
right.
That was
yes.
A beautiful perspective. Thank you.
Good. Glad you liked it.
Yeah. Is Cynthia still on? I thought she may have had a question or a comment.
I think someone said they had to hop off for a call.
I bet that was Cynthia. Okay.
Yes, it was.
Okay. Well, anyone else? We've got our expert here in the room. This is the perfect time to ask questions or comments or any remarks.
Christine, do you work with senior citizens, like younger ones that they've been saving their whole life for retirement? They've got a retirement fund, but they're not quite sure how to manage that once that time hits, as far as having spending money versus the fear. Like I have a client who, because I teach senior citizens how to use technology. So I have a client who they've been saving all their lives and she wants to spend some of their money, but he's scared to let her because he says, in my dreams, I see me dying and you being a bag lady because there's just not enough money for you to do the things that you want to do and get by and have a place to live. So he's scared to spend money and she wants to spend some because they've saved their whole lives working towards that goal. So do you work with people that are kind of teeter-tottering along those terms?
So I will say typically my clients are usually between 35 and 55. So they're still in their prime income earning years. Are they working with a financial planner? Because that is one thing that financial planners help them do is to say, okay, now that you've reached retirement, you are supposed to spend some of this money. And they can help them figure out how much it is safe for them to spend while still protecting that nest egg that is going to continue to grow, and add that, kick off that money for them every year for them to be spending. So I would say they're probably a better fit for a financial planner.
Okay.
Most of my clients, my ideal client, the ones that I love to work with the most, are single women and women who are going through divorce or non-traditional widows. I do work with couples. Actually, Bonnie's on today. She's one of my former clients. And so I do love working with couples who love each other, but money is like their final sore spot. And usually they are higher income earners. They've got a complex financial picture. They own a business. So usually, like, income's not the problem. It's usually managing that, or they're going through something very emotional. And so they are so overwhelmed that they don't have the bandwidth to deal with the finances. And they literally need somebody to just step them through what they need to do to get through that very emotional time with divorce or widowhood.
Okay.
But I can connect you with some financial planners.
I'm pretty sure they have like tons of stocks and stuff like that. They've got more than enough money. He's just scared to that she's going to be a back lady because something happens. So I don't know where that fear came from. He was self-employed, so that's probably where that came from, was that whole.
It could be.
I get it.
Yeah, it sounds like there might be some issues kind of down deep that that are surfacing in this way. Like maybe he saw his mother go through something similar. Where it's like there's something very emotionally charged that's making him think this.
Right.
That may or may not be lining up.
I could see that
with the facts. And I see Teresa said that he's using it as an excuse. It could also be a controlling issue too. Where he doesn't want to. He wants to keep a tight rein on the finances, and him not having that tight rein on the finances, is triggering him emotionally. So
he's funny about it. She'll just pull out the checkbook. She's like, I don't care. And she writes a check. And I'm like, okay. So seniors.
I mean, I am certainly willing to talk to them, to see if maybe they would be a fit, but
I got it. I hear you. Okay.
I just want to be transparent.
Yeah, absolutely. Thanks.
All right. Well, that was absolutely fantastic, Christine. Thank you so much for a wonderful, wonderful presentation and program, all about ways in which we can disaster-proof our personal finances. You made it so simple and so clear. Now it's a matter of implementation, right? And making it a priority in our lives. So thank you for all the work that you do.
Thank you.
So, all right, so I think what we are going to do, if you are all still available for another 10 minutes, I would love to break you into some breakout rooms and let you do a little bit of networking. I know we're all here to have conversations and meet new faces. So if you're up for that, stay on. Just give me a second here to create the breakout rooms. I'm just gonna do 2 for 10 minutes. And I will have our little system actually do the breakout rooms for us. And let's see here. Just give me 1 second. Let's see here. Okay. And we're just going to do this for 10 minutes. So basically, your name and your company, your biggest takeaway from Christine's presentation, and then who do you want to connect with, or who would you like to connect with? So a referral. All right, and I am going to click go for 10 minutes. Here we go. Well, hello, Teresa.
Girl, is it just a second? We better behave, people. I
know, exactly. How are you doing?
Good. I'll see you in later.
Okay. Oh, wow. Okay, so everybody's popped back in. Awesome.
Can Marianne finish? Can Marianne finish what she was saying? What were you starting to say, Marianne, in our group?
What was I saying? Oh, Marianne Chadbourne.
Marianne Chadbourne, yes.
Marianne, you're muted.
She wants to connect with you, by the way, Marianne.
She already is. She writes for the HIP Senior, but she's muted. Marianne, unmute yourself.
Well, she said she wanted to be connected to you, Marianne, so.
Well, I think Marianne and Marianne can connect outside of this virtual space that we're in. Hi, Marianne.
Okay, Marianne, I made a mistake. I made a mistake. Okay. I meant to make my ideal client would be somebody that is interested in skincare, must make improvements in their skin. I'd be interested in somebody like that. Okay.
Okay.
All right. All right. Well, I hope you guys, thank you so much, Marianne Chadbourne. It's so good to see you here. And I want to say thank you to all of you for joining us here at Virtual Business Week for day number 4. And Christine Luken was just extremely dynamic and insightful. And I know I cannot wait to read and download and read her book. Let's see here. What else do I want to share before we wrap up here? Tomorrow is going to be our last and final day for this week. And we have Celeste Giordano. She is one of our success team members here. And she is going to be presenting on building a legacy business, as well as finishing 2020 strong. So we have 4 months left in 2020. And I know many of us are ready to say good riddance to 2020, but it is so important that we set ourselves up for success, keep moving forward and put some strategies and planning in place. So that's what tomorrow is going to be all about. I do want to invite you, if you have a colleague or a friend or two that is a small business owner or entrepreneur, I invite you to invite them to be a guest here tomorrow. We would love the opportunity of meeting them, and if they could get some value out of this, then we're doing our jobs. As I'm thinking back to Maritza Coscarelli, she talked about you can't be a success if you're and a secret at the same time. So I don't want to keep us a secret. So feel free to invite a guest if you have someone that you feel would find value out of this experience and what we have to offer here. So and I think that is about all I have for you. Yes, Joan.
Yes, I just want to give a plug for Celeste because I've known her for about 5 years. Oh. And she's been a business coach of mine, still is, and a mentor and a friend. You won't find someone any better than Celeste for down to earth, practical skills and techniques about growing a business. So you want to make sure you'll be there. I won't be on tomorrow. I keep my 5-year-old granddaughter on Fridays. Aww. So I'll be spending some quality time with her tomorrow, but I enjoyed meeting each of you.
Thank you so much, Joan. We're thrilled that you joined us today, and you're absolutely right. Celeste is just so genuine and spot on as a business coach, sales coach, and strategist. So we're looking forward to having her here tomorrow. So thank you so much, Joan. We're glad you joined us today.
Thank you.
And also remember to click on the 3 dots and save the chat so you can connect with people offline as you would like to.
Yeah. All right. Also, I will be sending everybody the video replays along with the chat if you don't get around to saving it yourself. And I just look forward to spending time with you again tomorrow. So thank you for joining us today.
Thank you.
All right. Have a good one. Take care, everyone.
Bye.
Enjoy the rest of your afternoon. Bye-bye.
Bye.
Thanks.
Bye.